Welcome, welcome. How we doing, everybody? Lambos, what's up? Ooh, got the junior banker in the house. Dalai Lama, how we doing? I've been seeing your name a lot lately. Happy to have you. Happy you're liking him. Just hanging out, man. How you doing? Got Max in the house. Dude, you're the man. I've been thinking I'm gonna get everything pinned in my tab, but I'm probably, if it's all right with you, also just gonna post that playlist that you made for easier access for people, hopefully. How'd everybody's day go? We all have a good day. Pretty fun one if you were on the right side of it. I probably took too many trades today, but it was one of those fun ones where things are happening. Yeah, those people learned the unfortunate reason of why you always got to look at that big picture, and let's be real here. Who wants to be short down here? Nobody should want to be short down there. Market's flush $9 on us and you're trying to short a big old round number. I'm purchasing calls for sure. That daily 21 hit for you, Lambus? Yeah, there's mine. Oh, just you're saying they're good. They just ended us right on it. I meant to look, those ones. I mean, Tilia watches, I watch. I never watched them on. I used the 513 a lot. People have all heard me talk about it in lectures, but I'd never used it on longer time frames. And then Tilio, and I mean, Tilia said 513. I think you used that 813 and said like, look at that. And man, that was just free money for a while. But we're starting to get a kink down. We haven't had one of those since well end of May. Curious to see what we want to do here. Got a lot going on going forward. But man, what a place to be long. It's a great one. I caught a little ripper in the end of the day. I had a fun day for me. And look at that 513 cross. Just ride it down $7 until it crosses again and just be happy. Oh yeah, OPEX, huh? Man, yeah, we got this week. What a good week. Well, SPX mastermind. God, I don't know. I probably shouldn't give my opinion on that. Oh, whatever, Adam. 1% day. That's great, man. People shoot too high in here. People have wild gains, and don't get me wrong, if you have a smaller port, it's obviously easier to make a bigger percent, but you got a halfway decent port, you do 1% a day every single day of the year, and you 250% your port in a year. I mean, find me something else that'll give you that big of a return on your money, and I am on board. Yeah, I don't know if VC's euphoric or if there's uh or if they're just crackheads. Sorry, we're officially rolling. We probably shouldn't do that. Welcome everybody. We'll give it a few more minutes. We'll give it a few more minutes and let some other people show up, and then I'll do a little talking, and then we'll get right back into it, kind of picking up where last night left off. Tim White, yeah, again. That was a pretty funny one, huh? I mean, I know we aren't supposed to troll on trade floor, but it's pretty funny to post the inverse SPY chart, say SPY's ripping. Yeah, Adam, be happy with that, be happy with that because 1%'s great, I mean, I don't care what size port you have. If you're doing, a couple, 1 to 3% a day, you're killing it. Like at the end of the month, you are going to be so happy. At the end of the year, you will be so happy. You might see it as, 1 or 2% a day, and it doesn't, maybe that doesn't seem like much, but compounding gains get absolutely ridiculous if you can just stick to those nice, 1, 2% days. It gets wild after you do that 250 days in a row. That's what I'm saying. Like if you put up some huge day, like that's like, and I get people want to have that fun on SPX end of day or whatever it is. I get it, it's fun. But like if you have a great day, why go potentially just ruin it in the last couple of minutes, like, and that just the unfortunate side of SPX is, most people are losing money. So like I'm sure a bunch of people caught this pop candle right here, and then we're like, I'm holding, and 2 minutes later that contract's down 50%. Yeah, Hunter, I did for sure. I know I've done multiple ones on just trading, cheaper, slower moving stocks. And then, yeah, I mean, you guys know me. I bring them up in most of my lectures. I wish more people would do it. Somebody that I've worked with a long, and we don't, I don't teach him much anymore. That's for sure. 1K. He is so good at trading those slow movers. He trades them all the time. There's trades to be had every single day. So I definitely got some lectures on it. 1K's got some lectures on it. If you can't find them, just shoot me a DM and I'll happily find them and get them sent over to you because I love those things. I mean, T has been just an animal lately. I mean, when you're getting moves like when you're getting candles like this on T, they're like if you can get it like a 50, 60, 70 cent move on T in a day, those contracts do over 100% every single time. So it's been fun. They're not to be underestimated. And it's one of those things we're going to talk a little bit. This is what we're going to kind of start the lecture with about the market right now and how people are feeling and how people are trading it and how if you kind of, widen your horizons a little bit every once in a while outside of big tech, there has been some, and not to say that shorting tech hasn't been epic, but it just, what I have seen from people in the last week is it kind of seems to me that they're just incapable of buying puts on tech, no matter how much it's getting clobbered. They just want to try to catch the bottom. So we're going to talk a little bit about that tonight. And just, it of course plays into price action and, actually looking at the whole market and seeing what the whole market has to offer us. And there's no denying that the last year and a half, you can basically, hate to say it, but you can basically blind slap longs on tech and be a-okay other than, September of last year and this last week. And so that's changing in the market. And we're going to talk about that and why I think it's a good thing and how we can potentially capitalize on some of it. One thing. Lambos, did you see Serve real quick? I just saw Joe. Oops, I think it's SERV maybe. I saw Joe mention it in TradeFloor. Nvidia disclosed a stake in it, so it ripped 100% after hours. I thought you'd like that one. This one's classic. Look at those hourly candles. That is such a Lambos chart. It's ridiculous. Okay, welcome everybody. Yeah, for whatever reason, Nvidia wants to own, 1,062,000 shares of a $2 tech company. Could be worth watching. Okay, welcome everybody. Happy to have you here, Dirty River. Again, this is kind of part two from last night. If you missed last night, it's not a not a huge deal. We're gonna do similar to what we did last night, and but with a little bit more detail, going a little bit slower. And so for anybody who wasn't here, last night was, technically the last night of the series that we've been doing. I think it's been 2 months or so, 8 classes. So that hopefully I can get it pinned in the tab. My buddy also made a nice YouTube playlist of it, so I'll get a link to that for just easy access for everybody. And this is kind of, you know, this class is about price action, but it's also about building a trade plan. When do we want to enter trades, exit trades, all of that kind of stuff. Some of the parameters that I might look for throughout the day. And so what we were doing, and unfortunately we got through all the days I didn't trade, but of course I don't remember every candle of every day. I mean, I don't even remember most of the candles from today. But what we were doing is just pulling up the SPY chart. We did, we charted our support, we charted our resistance, we charted all of that. And then what I was doing was basically just zooming in on days that we were trading, and this is the one where we're going to start today. Zooming in on days where we were trading, and basically just starting with the chart here and discussing what I was seeing and saying, hey, I would take an entry here, I'd take an exit here, I'd trim here, showing you exactly what I would do. I, of course, want to give the disclaimer that, when we do these kinds of things, we were lucky on a few days because I was out of town. So, I had glanced at the charts when I got back, but really just the daily charts. I didn't see how the days actually went. And so I was kind of able to just tell you, this is what I would do. This is how I read a chart. This is how I watch candles every single day. And what do they tell me? But we were kind of going quick, we were getting through a day in about 15 minutes. And today we're going to slow it down a little bit, and we're going to go through, I think, just basically 2 days ago, yesterday, and today, and kind of show you, what my thought process had been on trading it. Maybe some of the trades I took, if I remember where I took them, but that doesn't matter. We get to go back and we get to look at the charts and we get to say to ourselves, would I enter here? Why would I enter here? All of those kinds of things. And talk about the price action. Last night I was saying, oh, whatever, if we're pulling down here, blah, 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 I want to buy calls. But we weren't talking about what the candles were telling us, And so that's what we're going to get into a little bit more detail tonight. We were mostly focused on the surface technical stuff, EMAs, SMAs, supports, resistances, trends, and kind of trading around those, which is awesome, extremely crucial part of it all. But context in the market, and it's something I'm sure a lot of you have heard me say, you need good context to back up a good trade. You can't just buy calls every time we pull back to support. Sure, you might get bounces, but we also might break through it, and it's just not a very good method to say, and so, or method to trade. So when I say we need good context, you want to say, and we'll just use right here as just a quick little example. This is a whole bunch of inside candles when you really break it all down on this big candle here. So really, none of these offer an entry in my mind. I need the charts to tell me get in. I'm not going to get in for no reason. And until we get over to about right here, this gives me nothing. I mean, you can be shorting the bounces because the trend is down or whatever it is, but these candles aren't giving me enough information to feel confident in the trade because they all fall within this candle. So we know the market is at least at somewhat of an agreement. What we want to see and what I like to look for is candles like this, where maybe we broke out and then we pulled back, and then we have some candles where we have indecision, and we finally have one. And this is something where, this might confuse people. We're going to get after here in just a minute, we'll get into more detail on this. But this candle, it's red. A lot of people might not like it. They're going to look at it and say, oh, that's a red candle. I'm going to look at this candle and say, this is the first time where we have had a candle, go very, very ugly and finish, in my opinion, bullish. We are closing near the high of the candle, closing well above the midpoint. We have a small little wick on the top and a big wick on the bottom, which shows us buyers are starting to show up. So that's the type of thing we're going to talk about tonight. But before I get into that, as always, I think analyzing large time frames is the most important thing we can do as a trader. And so that's what we're going to start with today. Some people might have heard me talking on Trade Floor today saying, the blind tech traders are having a rough go of it right now because obviously, tech is down. You pull up any of these big names like Apple getting clobbered, Microsoft getting clobbered, Google getting clobbered. Doesn't matter the big tech name you pull up right now, they are down. And so why are people struggling with that? And in my opinion, it's because if you zoom out, look at this chart. And this is on, this is, the bottom from the bear market. This is the weekly chart. There, over the last 2 years, give or take, over the last 2 years, there have been very, very few weeks in that time where you could, buy calls with time on the big tech names and lose money. So when we had, that pullback at the end of 2023, when we had the little pullback earlier this year, that we had some news stuff coming out on some of the stuff, one of the first sell downs on Nvidia, people got hurt. But for the most part, you've pretty well been able to just buy some calls, buy some calls on tech with time and make money. So when we have a week or two like this, where we're sideways leaning red, or today where, this week is just a hideous candle. We got QQQ at its worst was down over 25, $26. That's really bad. So the tech traders are getting hurt, those Apples, Amazons, Googles, Microsoft, Tesla, all of them, being Nvidia, AMD, everybody's favorite stocks are not paying them long right now. And people have, and I understand it because, people have a hard time shorting those names. And I get it, people like me and Tilio, and most of us in here have been trying to hammer into people for a year and a half now. Don't short Nvidia. Don't jump in front of those kinds of trains. Well, that has kind of ended, and we've seen it in Tilio's newsletters. You've heard it in, from me in here. Nvidia's in a range. Don't touch it. It loves to range and then do big breakouts. Wait for the big breakout. Well, most of us prefer to trade long. And if there isn't a long tech trade, it's important to look at the entire market and say to yourself, I like to trade long. Where should I be looking? And it's an interesting fact. I wish I could remember the thing to pull it up to see, the amount of stocks trading over their 50-day moving average. Tilio talks about it in his newsletter a lot. I typically see the chart when he shares the chart. And so it's been this interesting thing. The market is down, especially tech. SPY held up a little better with financials and energy. Obviously, very strong sectors. We're going to get into those as well. But tech's been down. Everything. And I know, I'm slightly exaggerating here, but everything in the market is up. You can buy calls on basically anything. Until today, we finally did see some selling on IWM, selling on the Dow. See if it's a one-day event or not. But while tech has been getting clobbered, if we look at the daily chart, while tech has been absolutely getting clobbered, IWM has been until today. And, we had the first sale yesterday, but it was up huge again at one point. IWM is up 10% in the time tech has been getting clobbered down 5% from highs, whatever it is. So IWM been doing absolutely awesome. For anybody who doesn't know, that's small caps. Another sector performing amazing again until today, the financial sector. Bank of America, JP Morgan, all those big names performing very, very well. And we as traders, if we like to trade long, we need to go looking for those long trades. So here's XLF, absolutely flying. Another one that's been putting in a real great move, XLE, absolutely flying. And so look outside of the normals. If you prefer to trade tech, then okay, but trade with the trend. It always comes back to price action. And what is the price action telling us on all tech names? They're going down. Everybody always wants to catch the bottom. Everybody wants to catch the top. The people who have been dying to short Nvidia for a year now are now the ones just hunting the bottom to try to get long. people can never just be happy trading in the direction that the market is going. So if you like to trade tech, and we'll see when this tech selling ends, we got some nice numbers out of Taiwan Semiconductor, which unfortunately were messed up with some news out of Taiwan, at least in my opinion. Then we had weird presidential news. Then we got good earnings, though a reduced guidance out of Netflix, but big numbers. They doubled the new subscriber prediction was almost doubled from what analysts expected. So good numbers. We'll see if maybe this can be a little boost to tech buyers. I do think tech has a bounce coming soon, but I'm still personally not ready to really be diving in long on tech. I want to stick to some of the smaller names, the small cap names, all the way into the next FOMC meeting, because we got an FOMC meeting at the end of this week on the back of some really good inflation data. We had our first, some of the reads on inflation data was the first time that it has happened since the beginning of 2020. Just right after that, right after the election, we have some of those numbers getting back down there. The Fed was a bit more hawkish than expected last time, and I personally expect them to have, and hawkish is rough. I wouldn't quite go that far, but Powell is not as upbeat as he has been at some of the previous meetings. I expect a pretty chipper Powell on the stage this time. So we'll see what happens, but so far the data that they're seeing, he's got unemployment numbers going up. I know that's a double-edged sword, but it's what they want, and inflation coming way down. The Fed is winning the battle right now. We can still end up in, mild recession if you're in the field that thinks we aren't already kind of in a weird one where I stand, but we'll see what happens going forward. But for now, I want to focus on some of these small cap names. Obviously, I love AT&T, been putting in really nice moves for us. I love Coca-Cola, finally did that breakout over these highs, putting in really, really nice moves for us. Another one got some love, but I was late to the party on this. I didn't start checking Pfizer until we were basically up here, and I had no interest in getting long on basically a triple top, for all intents and purposes, a triple top. I wanted to see this breakout hold a bit better than it did, but focus on some of these other names, just to touch on some financial names. And again, market-wide selling today, but pulling back to some important areas. Bank of America doing great. JP Morgan, big sell on it today, but that thing's just been a leader in the financial markets. Even some of the I don't want to say dumb, but questionable companies. We had buyers even show up on Affirm for the first time in a while. That was when I was watching. Everybody's least favorite bank, SoFi. Big buyers on SoFi, obviously selling today, market-wide selling, but really, really great moves on some of these small cap names. So when you're, going into trade tomorrow, this is what I recommend people do. Scan through a few stocks, that some things you like to trade, scan through a couple of the sectors of SPY. You guys see in my tab, I talk about XLF and XLE a lot because financials and energies put in, they can put in some big moves that can affect SPY. And so I like to look at XLF and I like to look at XLE. Maybe I'll look at some individual banks. Then I look at all my big tech names. I'm going to pull up Apple. I'm going to say, yep, looks bad. Amazon, yep, looks bad. Google looks bad. Tesla looks bad. NVIDIA looks bad. So I guess actually that's kind of a sweet candle print on NVIDIA today. But still well within the range, and I did all this going into the morning today. And then, I look at SPY. You always come back to SPY. If that's what you like to trade, you always come back to SPY. And I looked at SPY going into the day saying, well, all those tech names are bearish. If we get any sort of rollover on XLF or XLE, we're definitely going to see some selling. And so that's what we saw today. Just to look at today's price action on the financial sector, big pop off in the morning. I mentioned it in my tab. The second we rolled over on XLF, we also started to do a little bit of smaller sales on XLE. This funnels selling into SPY. We got tech selling, we got financial selling, we got energy selling. No matter what, SPY is going to start coming down. By the time XLE really started selling about midday, that was when, if you were trading SPY, we saw, small bounce and then again proceeded to flush another $4 in less than an hour. So I'm willing to bet this just about lines up with the financial rollover as well. tech started the selling, financials caught up, energy put the nail in the coffin to sell us down real far. So that was what I was watching in the market today, how I analyze the market, the price action that I look for on a, big picture. You can always look at SPY, but you need to look at what makes up SPY to truly understand what might happen in the market. And when we have weakness in the market and then we have news coming out that can be taken in a negative light, it's pretty important to go hunting the short trades. Use all the price action on the chart that you can, of course, but kind of skew your bias short. There was a lot of attempted bottom catching today, which, some of it worked. There were some nice bounces to be had. I think if we look at my chart, this was one bounce down here that I recommended in trade floor, ended up working out pretty nice, bought us right up into the zone where you would expect the rejection, and then was ultimately met with more selling. It looked like a nice bottom tick. For anybody who's kind of into those, the 3 push wedges that I've talked about, this is a nice quick 1, 2, 3 curling at the bottom with a nice reversal candle here. For price action wise, we got a nice little reversal candle here. So we were able to start looking for some longs on that trade right there, knowing that we aren't looking for a run to high a day. We're looking for a nice little bounce up, maybe to some EMAs, maybe to, some resistance overhead. And ultimately that's what we got. We had another, I don't want to say, like we didn't necessarily have like a super low volume day. We weren't in those 30s, but we were back to that nice 40, 50 million range where I like to be, where technicals will work pretty good, where you'll have velocity in trades is how I like to think of it. You can make money on a nice little sell-off like this, but if you can catch one candle like that, you'll make more than this slow trickle down sell-off. And the quick moves tend to happen mostly when they're backed by volume, which is what we had going on today. Okay, so with that, that's my spiel on what you should do in the morning regarding price action. Look at the big picture on everything and trade those. And now we're gonna get back into where we left off yesterday. Let's see, I think it was this day. This is where we left off yesterday. I should see if we got any questions in here. Noodle, how we doing? Happy to have you. Ricky, welcome. I use that first 90 minutes mostly for the opening range, but then when you're talking about that first candle, maybe you might be thinking of that I like to think of it as 10 candles is normally what I'm looking for, where maybe we get a push up and then we get a push down and then you look for the breakout over that. This one obviously failed. That's just fine. 3 15-minute candles where you see attempted breakout, you see attempted breakdown, they both fail, and then you look for the continuation in one direction. If that's what you're talking about, yeah, those first 3 15-minute candles are just fine, and will work great for you. Okay, give me 1 second. Still probably got a couple of more questions in there. Oh, Noodle answered that one. Yeah, Flocko, I'm assuming you were saying IWM when I was saying look outside of tech. So Raphael, your statement there about the money moved away from tech to IWM or small caps, very fair. It's a good way to put it. I will say we are in an interesting place in it. We won't know until the data comes out, but there has been man, I wish Tilio was here. I'd ask him. As I recall, like $1 trillion sitting sidelined in the market, sitting cash, not doing much. So this is one where they could, they're obviously unloading some tech positions, not at losses. All of these people are up gigantic that are selling right now. So they're booking some profits. Now the question is, are we seeing some money come off of the sidelines into the small caps, bringing more money and liquidity into the market? Or are we just seeing people shuffle some profits from tech into small caps? I think jumping the gun so far, but move some money into small caps on the hope that FOMC, the Fed, Powell and his team say, rate cuts are on the horizon, say something that is good for small caps, because lower rates are good for small caps. So we might just see some we might be seeing some profit be shifted. We might see some money coming off the sidelines be shifted. And we might see some people repositioning into those really beat up stocks that have much better potential growth. Nvidia shares, I'm like, buy some Nvidia shares. It's, look at those things in 10 years and you're going to be happy no matter when you buy them. But it's those small caps right now that have much greater potential returns. Nvidia is a prime example of, it can it go to $240, go up 100% from here? Yeah. And I think maybe likely over the next 10 years, it probably does. However, you need to remember that that is the market cap increasing by $3 trillion and it becomes a $6 trillion company for that to happen. Something like a small cap, little known, cheapy thing, SoFi worth 60 billion, 50 billion. I don't know how, but it's a lot easier to go from 50 billion to 100 billion than it is to go from 3 trillion to 6 trillion. So I think we're just seeing some people take advantage of potentially larger returns right now. Okay, and so just a little summary of what we're going to do here for anybody who was not here yesterday. So what we did, this is the same chart we made yesterday. No lines have been added. All we did was discuss how, we were trading up here kind of at all-time highs. We did only all of our charting came from the daily and the 4-hour on these charts. So it came from the daily and the 4-hour. Any of those, after hour pops we took into account on the 4-hour. So all these levels came from the daily and the 4-hour. And then what we're doing is we started somewhere back here, I think after these 2 days, talked how we would have traded these days with our levels. And now we're just covering more days. These are, for anybody who hasn't been in my classes, we're using everything I've taught them. So the indicators I like to use just to do everything good or to, cover everything that we're doing, 9 EMA, 20 EMA, 50 EMA, purple line is VWAP. Stair-steppy thing right here is actually the hourly 20 EMA shown on the 5-minute chart. And then the only other thing that I've been adding, and, not everybody has to do this, it's just something that I personally like to use, is the opening range. And all I'm doing on the opening range is the lowest low and the highest high in the first hour and a half of the day. So technically this high was set, well, maybe we set one right before. Technically this high was set at 750. And so that's where we set it. Even though these candles might have been a little lower at 8, this is still the highest high. This is the lowest low. So that's what I want to trade around. And then all of our levels that we have, again, these are just off that 4-hour in the daily. And so what I've been doing is showing people trades that I would have looked for throughout the day. So first thing that I'm going to do, I'm always going to look for any sort of trend in pre-market and draw my trend. We set a low here. What do we need for a trend? We need a higher low. You could have drawn it to here. You could have drawn it to here. But as we go into open, I like to just have as much data in my trend as I can. We can say we're setting an uptrend, but as a whole, that pre-market was pretty flat. So then we just come into the day. There's really nothing here. You can make a little argument for something like that, but I would not take that trade. I would want more data on a trend break right there to trade it. But you're going to come into the day and always try to have a plan before the day starts. So obviously we don't have the opening range yet. Where we're opening 563, not really where I want to be diving in. We have very, little data in this area. So most levels that we have will provide us a reaction because they've been touched so few times. So I don't have any interest trading this right off the bat. And then as we can see, we go into the day, we're kind of rejecting right where we should, but this is range activity right off the open. We got, a nice push up, candles within candles within candles, big wicks on both sides. We had what were once green candles turning red, red candles turning green. This shows us in that first 20 minutes of the day, we need to see a breakout soon, or we need to expect range trading. So here we go. We break down basically exactly to our level, start printing some more candles. At this point, we're what, 45 minutes into the day, something like that. So at this point, Me personally, I am looking at range trading. It's what I'm going to be looking for. I'm basically going to be buying dips down to 561.77 and shorting rips up here to 563.64. That's how I'm personally going to trade it. So now that I've seen a few candles hold that hourly 20, I'm likely going to be looking to buy one of the next dips down to the hourly 20. This candle, completely unhelpful. This candle, really completely unhelpful. Bearish, but fully inside of the previous candle. This candle right here is the first one that piques my interest as far as maybe I can make something work on a trade here. And why this one? Because at one point it was red, and then it finished strong green, closing near its highs. We look down here at the volume. As I said, always, always, always pay big attention to volume. We're seeing our first, we had just solid buying going on that candle. That's what you want to see for any sort of reversal. So for me, like I said, I'm looking to buy the next dip to the hourly 20. I'm getting in here. This is an interesting entry probably for a lot of people, and I want to explain why I'm taking this dip entry. Because you might look at this and say, hey, crazy, we're under all of the EMAs, which is very true. And you typically don't want to be buying calls when you're under all of your major EMAs that we use, the 920 and the 50, But I am looking at it different than most people. I have already identified by just a bunch of inside candles, breakdowns that have failed and gone sideways, that I'm expecting range trading activity, at least for a little bit, until the breakout comes. So I'm buying calls here. Where am I stopping? Right down here. That's all, a close under the hourly 20 is where I'm personally going to be stopping out. What is my target? VWAP. What is my next target? This 563.64. Why do I take this trade? One of the main reasons, for contract selection on something like this, I'm looking for a small move. So I go right at the money, 563s, and I know that if I can get the shift and the pop over it, my return on this basically $1.30 move is going to be maximized dollar amount, not percentage amount, but dollar amount. So I like to buy in here. Next candles, we're trimming off. You get your 50-cent move, almost go in the money on that. You're trimming some of those off. 75-cent move, even if you had the great entry, you're trimming some of those off. You're up nice on that contract, and you're expecting range activity. Well, this one apparently works out well, and you pop right up to the top. At this point, I'm out of the trade. That's it, And so we enter here. Here's our first trim. Our stops are now above entry. We've exited the trade. At that point, I'm going to take the oval off so we don't have to stare at it. That's where we exit, because that was our target. You don't want to, if we look left on the chart, as I always tell you with price action, if you want to know what the chart is going to do to the right, look to the left. So we look left, we see a whole bunch of consolidation, and we see, a few strong rejections. We are completely out of the trade at these highs. Now we watch it. We are expecting range trading activity, so this does offer an acceptable short trade. However, as we've learned in our classes, some things that I like to use, I always, if I can, I'm going to use statistics as well as technicals. Statistically speaking, 80% of breakouts fail. And so we want to take note of that and say, well, this is the fourth test. So the fifth one could break. So we want to be a little bit careful, but we have one other thing occurring. And I know this might be weird for some people because I'm on the West Coast. We have one other thing occurring. At this point, we're now 15 minutes from that opening range from the opening range that I like to trade. Let's see, we got to get back here. We're now 15 minutes from the opening range being set. So I'm going to get that on there. I want to know, where is my range so far? And so it could change. You guys will see it in my tab, but sometimes I'll post the range early and say, hey, this could change still. I might have to bump it up or whatever it is. But this is what I want to take note of. We have the opening range happening. We do have strong buying going on. We have our fifth attempt at the top. So for me, this one I'm not going to short. I don't know if it's going to work, or if I'm right or wrong this time, but this one I'm not going to short, because Our technicals are saying we're pushing up, we're above EMAs, we've bounced hourly 20, we broke through VWAP. So we have more telling us to be bullish than bearish. What do we have in the bearish category? Kind of like a double triple top going on here and the top of the opening range. So when we have that sort of indecision, we have some bullish things, we got some bearish things, I don't take a trade. I just wait. So to me, this one is no entry, and we just want to look at a couple more candles. We see another candle, rejecting the opening range. Obviously, see, this is where we say, okay, we got to bump it up a little bit because we set a new high. So there's our new high, and we just want to watch another candle. And we're gonna miss. I'm gonna miss personally for how I trade. I'm missing that short right there. Could I have taken the short on the rejection here? Sure, but I wouldn't enter here when the candle closed. I would want to be entering up here, but because I don't like that entry personally, I would wait for the candle to close, and it closes too far away for an entry for me. So again, I just sit and watch. I'm sure a lot of people are looking to buy the dip here to this 9 EMA, and maybe it works. This is not the type of candle that I want to see going into the 9 EMA. I personally want to wait and see, is it going to bounce off of there? Are we going to take a quick break under it? So we watch the next candle straight back up to the top of the opening range. And now I'm saying, okay, we wick down. We're starting to see some buyers. At least for me, I'm starting to consider opening range is set. If we break out, I'm looking to buy the first candle dip into it. So, well, yeah, we do not get a dip on that one. That one does not even give us a shot. So I sit and I wait. Again, I sit and I wait. This candle, and we're doing this a little slower tonight. You're noticing I'm talking about the candles. I'm using no named candles. I don't do your, like abandoned baby. I don't do all the like gravestone doji. I care what the candle tells us. And what this candle tells us is bulls lost spectacularly. This was a great big breakout that is now completely rejected, given up the open and is now closing near its low. Big wick on the top, tiny wick on the bottom. I ain't buying the dip at the OR this time. Maybe it comes and we went too far. But I ain't buying the dip at the OR this time. It comes, maybe you catch a bounce, but I'm still not taking that trade. You can make an argument this is a nice candle. I'm still not taking that trade. This next candle breaks in. We see it break back into the opening range. I am shorting the next bounce to this 563.64 level because this is a weak enough breakout failure. We had one good candle outside of there. You could say this one's all right. I still don't love it at all. Not enough for me to want to take a long trade there. Now we break back into it, and now I hope that we take some, and we don't get it. You hope you get a bounce. This could theoretically be close enough, but let's be real here. This little wick up here, you very likely did not have enough time to short it. Your stop would have been above the top of the opening range if it comes, but now at this point, we've missed the trade. And so that's what I tell people to, sit on their hands. Maybe people were probably asking, do we buy puts here? And I said, no, it's a chase. And then we get a big dump candle and I'm wrong. That's fine. But for me, no entries still. We're just missing everything. Swings and misses on a day. So now I'm sitting and I'm waiting again. And the trades that I want are either dips down to here or pushes up to here. We identified in the first 5 candles of the day that we were likely going to be looking for some range trading. And so that's what we're doing. We're looking to buy any dip. There's our dips. We are looking to buy dips, hourly 20 opening range. So this one is our entry. I'm sure that this candle gave plenty of time to get into there. Even if you say, you shouldn't be buying it here, but anywhere down below here, you can give it the shot with the tight stop below. You want to be risking 20, 30 cents. You don't want to be risking 30 to 45 cents here. So this is our entry. Wherever you get in, maybe it's hourly 20, maybe it's this level, maybe it's down here. That's it. Now we hold them because our stop is outside of the opening range. Let's be real. It's a range trading day. If you get in somewhere down here, you can sell these bounces. You can sell this bounce. Both of those are paying you nice. It's giving you a 60, 70 cent move. This is a range day. So you take it as you can get it. If you miss this entry, this is another reasonable entry. This is another reasonable entry. All of these entries near the lows, double bottom. If we go to a longer time frame, these are just going to be double bottoms. You want to look for those types of entries. Then you hold them until range trading, you get that bounce up. Obviously, if you're buying any of these lows, very first, major target should always be VWAP. We can look at this, the thing's flat. Market is, ranging. We know that. Enter exit VWAP here. Next exit, you push up here. Don't be picky. Don't be greedy over your 10 cents to the top of the range and take your exit there. And so, as you can see, our two entries that we've taken have been very low. They're where we have wanted to buy the trades and have provided maximum return with minimum risk. So that's what we're looking for. So we keep going forward. Again, you could theoretically short that. I'm likely not, because I want to be closer to there if I can. I know we're trading ranges, but I'm likely not taking this short this time. I'm still looking for dips down here to the hourly 20 lower range to buy. So again, we get another one. I'm probably taking that, especially as we get a little bit later in the day. Those 563s are likely nice and cheap by this point of the day. So I'm taking that dip to the hourly 20 if I get it. It is hard. You're ways above the bottom, but we can see the price action is telling us that we are gradually going up. So the next thing that I'm going to do is, as I notice these sorts of things, is when I start to put them on the chart. This is what I would do throughout the day. Here's our higher low. Market is technically in an uptrend. We're dipping down to here. There's your entry. Stop is below there. Obviously, again, first target, VWAP. You hammer it at VWAP. Oh, wow. That one works out. I was going to say hammer it at VWAP, and then if you get any push to the highs, and let's be real, you guys all know how I trade. I'm fully out here. I likely missed this breakout. Oh, this is the day everybody's calling it a head and shoulders, huh? So I'm almost completely out of the trade here. And then if not, when you get these breakouts, that's when we begin to use price action to help us hold the trade. We took a nice low entry. Maybe you even took this nice low entry. You get the breakout. Obviously, hold on a pullback to the 9 EMA. You get another breakout. Bump your stops to the opening range. We keep pushing up. Bump those stops up. Because as we begin to consolidate into the end of the day, maybe you're making more money. This one eventually makes you more money, but this consolidation hurts your contracts. There's, at least a decent chance that your contract's value here is the same as your contract's value here because you dealt with an hour of sideways. And so that really hurts the contracts in the money or not, that's going to hurt your contracts. So really, this one would have been my last trade of the day. Obviously, if you want to buy this pullback, you can scalp it, but that's the end of the day. Just don't, we made good enough money. We had a couple of nice, bottom ticks off of that hourly 20 that we've been learning about. That thing is just unbeatable. It's a cheat code. And so that's how I would have traded that day. And really analyzing those analyze those candles. Look at what they're telling you. Look at what the market is telling you. When we start to range, you start to see the market setting higher lows. Quit listening to the head and shoulders traders. It's a range. Trade it as a range. And when the range breaks, trade the range. So that's that day. And on to the next one. Let's see if we got any questions. Ooh, that one was like right there. Would you re-enter the EMA 9? Probably this one is what you're talking about, Raphael, I'm assuming. Yeah, you could. And we could, depending on what we see volume wise, we aren't getting a ton of volume on that, but plenty, if dips to the 9 EMA, stops below EMAs are frequently good. The one reason I don't like this is you're so close to the top of the opening range. I don't like getting long there until we get a breakout, but unfortunately this breakout never provided a good enough dip to buy on it. Okay, so next day, again, same thing we do every single day. We want to analyze that pre-market, and this is the one that I'm excited for. Obviously, I didn't do this the other day because we hadn't got this far. You should obviously put that high on your chart. Well, pre-market, we start getting clobbered. breaking through our levels, breaking through our levels. Oops, I want to, let's see, going into the day, we've broken through a bunch of levels. All EMAs pointed down. We are well below the hourly 20. The hourly 20 is taking big steps down on us. Obviously, very strong downtrend heading into the open on the day. Still nice strong downtrend going into the open on the day. And so, well, we cheated a little bit because we see it. However, I'm looking for this trend break at our important level right here to take the trade. So this is what I am watching into open. Obviously, looking for the trend break, pullback. First pullback is what we are looking to buy. So we are looking to enter somewhere around here. Any of these lows, this is one of our levels. This is our trend line. Are we below EMAs? Yes, but we're putting into breakout here. We are so far removed from the hourly 20. We can kind of, not always, but have a little bit of hope that maybe we'll push back up to there to kind of reset the market. Not saying we're going to break out and go up, but just kind of pull us in a little tighter to those EMAs. And so that's what I'd be looking for. I would be taking my entry here. First trim for me is obviously going to be somewhere right around here, this high of day. We're only 2 candles into the day, but I'm looking for that quick scalp off the open. This is going to be another one that provides that move from out of the money to in the money quickly. So you can really capitalize a nice dollar amount on a small move like this. This volume might look a little bit weird to people, but this is just showing deviations in selling. We're seeing good selling on both of these candles that then disappears on the next candle. So we're seeing plenty of confirmation to be here, and our risk is below 559 and the trend. That's where we're going to stop out. So we got about 40 cents risk on the trade, looking for 60, 70, 70, 80 cents of upside on the trade. So great risk reward for a scalp, easy one to take. I'm personally, I'm doing these in like full honesty. If I get this nice push, my stop is tight. My stop is the high day. So I'm out of this trade on this red candle right here. And I'm looking for continued breakout. I'm looking for at least a move up to the hourly 20. Not necessarily a big uptrend day with this, when we're gapping down $4, $5, you don't necessarily want to just expect it to rip upside, but I'm looking for a push to that hourly 20 to likely try and get short. So I'm sitting on hands. And it's not giving it to us. Still for me, we broke below that trend. Really no interest in trades for me just yet. As I look back, I probably should have, I didn't have this when I was trading on this day, but I probably should have had something like this going on down here to at least have an idea of where that lower trend is. It's the advantage to hindsight trading. You get to see what you didn't do and should have. So we're gonna have a little trend like that. And now we've broken back below this trend. I wanted my push to the hourly 20. As you guys saw, I was wrong. That's what I would have been looking for. But we're seeing a breakout up, failed, breakout down, failed. Now, this isn't the opening range, but this 558 up to 560.5 is the area that I want to watch. Above there, I expect more upside. Below this 558, I'm going to expect more downside. So I'm going to be watching for either of those. I don't care which comes. It means nothing to me. However, we're getting nothing so far. Oops. The only thing that we can do here is slap on this opening range. That's, it is now set. That's definitely going to be our lowest low. Slap on the opening range. And this is actually good. I like this one. I like this one because I'm going to be looking to now, the opening range is technically set here. It's based off this low. I'm personally going to be kind of looking to buy these dips. So we get this nice push down to the true opening range here. I'm likely entering some calls here. It is a nice enough bounce that you probably make a few bucks on it. You'll get your 50, 60 cent move, whatever it is, which pays great on a SPY contract, as long as it happens quickly. But I would personally still be kind of either holding them, or if I didn't trim them all out, looking for another entry. And so right here, likely going to be my other entry. I don't know what the volume looked like exactly, the real numbers, but when I look at this, I'm seeing personally enough green, even though we got some red candles, I'm seeing a lot of green down here, which tells me we have a good amount of buyer volume going on there. And so I'm taking the entry right here. Again, it provides a scalp, but I might have not taken the scalp. this is the type of trade where, you know, it's the third test, so I'm likely sized a little bit small, and maybe I don't take this scalp. Maybe it happens too fast that my entry's bad and I don't get to make the money, but I'm taking this trade right here. And then my stop is really a close outside of the opening range, or, and I'll remove this so we can see it, any hard selling I see below this 577.76, I'm likely going to be out of the trade. I'm targeting VWAP 559.30, if we're lucky, 560 top of range area, and I'm clobbered. So I'm stopped out, you know. So, you know, we've had one potential good trade, and then really, you know, this bounce potentially, maybe this bounce down here, and then stop out, hard stop out. You know, we get blown out on this one. Now at this point, I'm watching the chart. We've broken out of the opening range. So the main thing that I'm going to be looking for is a bounce to an EMA, a bounce to the low of the opening range, something like that, to potentially look to short it. But because I've just stopped out, I want to have some confidence in the trade. I don't want to see this be a failed breakdown. They buy us right back up. I might not take that short. We have to see what happens. Well, we have two pretty unhelpful candles. So what I'm going to do, here's my short. You know, you get as close as you can to here. You'd short the 9 EMA, you short that, you short the opening range. Your stop is any close back in there. If you see strong buying over 558, you can get out. So you're risking, you know, 20 cents on the upside. Obviously, main target going to be this 557.12. So we're getting about 70 cents a downside for 15 cents risk upside. Love that trade. And there's our target. So obviously going to be taking a large portion of the trade off there, just because we know we don't have many levels around here. So large portion of the trade comes off here, stops move into profit somewhere. And obviously we're stopped out in the next couple of candles. So just quick little scalp there. Hopefully covers the loss from the stop out there. Now we're starting to see buying. We're starting to see bigger buyer volume. We're seeing even, we printed, I would have liked a longer tail, but a halfway decent reversal candle that went from red breakdown candle to green candle with no wick on the top and a bigger wick on the bottom, still not big wick, closing back into the opening range. Now we're watching that to see if we can hold around it, see if maybe we can get a back test to 558, not a trade to rush into, because if the breakdown comes, it can be aggressive. So we watch a couple of candles. And very obviously, I'm willing to bet, you know, we aren't seeing it on this chart, but this next candle opened and it didn't even, it probably spent like 5 seconds in the opening range. We had no sort of entry here. Next thing we watch, downside. We don't care where the market goes. We know trend is down. We know we want to be shorting bounces. So we can still kind of be looking short on something like this. Now, giving up previous lows, we want to see what happens. I wish we had a little bit. Let's see. We'll get this guy blown up a little bit. We're giving up some previous lows. We want to see what happens. But as I always look left, let's see what this trend does for us here. Because here's the trend. Here's kind of a second push into it. Here, you know, maybe this is a second push. Here we're kind of seeing a third push into it. So we can basically expect if this breakdown comes, I might be diving in to try to get this short down to 556. Or if this bounce and reclaim of 557.12 comes, I might be looking for that bounce up to the opening range. So we watch it and we watch it and we see, really, we see this candle hold it. And then we see this candle turn around to buyer volume. And I start to have a little bit more interest in maybe looking for a dip to buy. And maybe it's this dip buy. Maybe we buy this dip here, little tiny dip coming back down, knowing stop is below here. We'll say what, 20, 25 cents, even if you want to widen it out to here, 40 cents. Entries around here, looking for push back to the opening range. Nothing big. We aren't looking for gigantic moves. Yes, we're trending down, but we're also basically just sideways. So we want to take the scalp here, maybe on this red pullback candle. Obviously, never buy the top of something like this. Look for a pullback, keep your stop tight. Targeting opening range right here. We get our target there, and I am down to a single contract at that point. There's no, you know, I assume we don't break back in. If we do, great, because I'm long, so I want to assume we don't break back in. But if we do break back in, then great. My target's 50 EMA or VWAP or 559, any of those moves up. So we just watch the market. We've ratcheted our stops up, so we're ending in profit no matter what. Little pullbacks, still likely, honestly, not getting stopped out. I mean, you can hold through this, getting late in the day, so you might get smoked a little bit. And there you go. You're stopped out. You got your little scalp. Maybe even shorted the opening range. I personally wouldn't, just because it's so choppy. I wouldn't have a ton of interest in it. Then sit and watch the market. Wait for something to tell us to trade. Everybody's probably trying to short these candles, buy the dip, short this, buy the dip, short this, buy the dip. I just watch and see. Do we get back in the opening range? Well, my candle closed back in the opening range, so I'll buy a retest on the break back in. There's our retest on the break back in, next candle. So now we're in the trade long. Stops are going to be a close outside of here. We do see that we probably put on a little more risk than we wanted, 30, 40 cents, like something like that. But entry here on this pullback, kind of ugly candle. We like to see this candle that went red up to green. Don't love the wick on the top side, but we're targeting VWAP. We're looking for a 50, 60 cent move. Ooh, well, maybe we got that. Maybe we didn't. Now, we're out of the trade because we either move our stops up and we take our little bit of profit when it's shown, or we had our stops here. Candle closed outside of the opening range. We're done with the trade. At this point, we're just sitting, watching some more. You can take the risk on calls off 557.12. I'm probably not right at noon, but you can. But again, continued ranging. Really no interest until, right here where we break back into the opening range. And I want to see, are we getting a strong or a weak break back in? We don't care what. Doesn't really ever offer a dip back down to it that we want to buy. Next one stops you out and nothing happens. So very slow day on that day. You can see basically would have been just a few scalps and that's it. And now we got 3 minutes left. I mean, we're going to go long, obviously, but we're going to talk about, I assume this is today. So we're going to talk about today. How would I have traded today? We're going to start on the big time frame. Obviously, market looking weak, big gap down, slow grind down all day yesterday. But then we come into today. We look at the pre-market movement. This here is obviously our pre-market movement. A lot of chop going on, still level, still working just like they should, bouncing where it should, but we are going to be opening the day right around all of the EMAs in the hourly 20, and we have a strong level overhead, our 559.31. Obviously, we sold heavy below it, couldn't hold above it in pre-market. So we're likely going into the day kind of looking to short any sort of dips or any sort of rips that we see off the open. I'm always going to draw some sort of trend just to give me a reference point. And I know if we bounce up to this 559 area, I'm looking to short this candle if we get there. And my stop's above 559.31. So, you're putting on about 30 cents a risk or so, something like that. And we just see what the market wants to give us. That's all we can do. There's our bounce up. And we get a little scared. We take our trade. Maybe we take our trade. We probably don't take our trade here because this candle, it's like we've been saying, was ugly, was very, very ugly, even dipped down to the hourly 20. Theoretically a buy, not a buy I would take, but we get the push right back up. Now, break up to our level. Instant rejection, basically an inside candle. If we get another bounce up, I'm looking to short this. This one gave us 2 opportunities. This candle, I'm short up here as close as I can be at our level with a stop on a close above it. You likely aren't going to get blown out too bad here. And this next candle, I don't know how it all played out, but gives us another nice push up where you could potentially be getting short here. Stop sitting right at the same place. Maybe we make money, maybe we lose money, but we're short somewhere up here. Yes, we broke the trend, but we can look at this and say this is a failed breakout. We have, resistance right over here from the pre-market. We likely don't want to be getting long there. Plenty of things to say don't get long. So obviously we're taking our short on one of these candles up here, and then we just continue to watch and an epic dump happens. You don't expect that. If you're in that trade and you're me and you somehow catch the whole thing, Now let's be real. If you're me, you're probably selling about right here. And then that's when the candle just absolutely knifes, you know? And so at that point, I'm out of the trade. Nice short, great way to start the morning, get a $1.50 drop on SPY right off the bat. And then I'm short at these I'm out of my short at these previous lows because you just don't know what's going to happen. Well, now that we've seen selling like this, we've seen selling in the pre-market, we've failed trends, we've failed all EMAs, we've failed hourly 20, we're short and bounces. Oops, we're short and bounces, no matter where they come from. You know, I traded today, so we don't need to keep any of this a huge secret. We're short and bounces. Here's your first bounce. No questions asked. You know, we got some nice buying up into here. We're coming into the EMA right here. If you want to take that entry, it is a perfectly fine entry short. Your stop is going to be, you know, new highs, maybe a break of right here. You're going to have 20, 30, 40 cents at most risk on this trade. You have VWAP, you got hourly 20. You have every reason in the world to be shorting this bounce and feel good about it. Pullback, you're obviously going to take a trim here at your first level. You know, you get that 50-cent flush instantly. You take a trim there. You get a nice breakdown candle to where we bounced previously. Me personally, I'm mostly out of the trade right here. I then proceed to watch. This is, if we go back in time, very strong level on this chart. You know, we want to watch this area on this chart. We knife it. So for me, I'm no way am I short at the bottom of this candle, but I am absolutely short on a bounce anywhere up to here. So again, here's my next short entry. And then this was a trade I hit today. Ride these down, we get this nice flush down. And how I manage my trades is anytime we get a big candle push down, that's where I move my stop. That's where I move my stop. That's where I move my stop. So ultimately, I'm stopped out here at 554. Does the market look like it's going to keep going? Absolutely. But when we flushed 5 minutes this far into the day, opening range was set right here. We sliced through it, you know, no questions asked. We are in short to bounce mode, no questions, you know, and so that's what you do. This is a reasonable entry. I didn't take it, but it would be stop above your 9 EMA, maybe stop above some of these highs, you know, very little risk on the trade. And then as some of you saw, this level slightly different from the one that I was saying. This was that lower target. We were talking, I said it in trade for, I think I said 552.40 maybe. So we're a little bit, you know, we can check real quick. 552.40, 552.36. This was my real chart, you know, from today. This was our target. This is where we were looking for the market to go. So if you got short, then you were obviously out of your shorts here. Now that we are at my major target, this is where I personally look for some sort of bullish candle to show up where we can potentially get a reversal. So that's what I watch for. You know, none of this telling me a whole lot other than we are holding where we should be holding. So I'm going to look for something like this, where we have a nice, you know, we were a little bit red. We pushed down to our level that we've held a few times. Maybe you even want to take note of something like, you know, a nice little 3 push wedge. We got 1 push, 2 push, 3 pushes. We get a nice push up like this. I'm entering calls somewhere right around here, looking for that bounce, 9 EMA, 20 EMA. And then this was a trade that was caught. And then on this consolidation, I'm out. You know, gave us a nice little bounce. Next thing I'm going to do, I'm going to say, okay, we've built a trend, because all a trend is a low and a higher low. And of course, you know, you can have a lower low, lower low, you know, that's how trends work. But we have our low, we have our higher low. Trend is now set. So we watch that trend and we look for either a break upside or a break downside. And we take that trade, whatever it may be. Obviously, with the weakness in the market, you could be expecting some downside here. And so, you know, I missed this one. I'm sure this is a great short entry. You know, I mean, if you were able to catch it fast enough, perfectly reasonable short entry, stops over any of these highs, and then write it down again to our same target here. If you want to risk the double bottom play, I did. I made a couple of bucks. Then we proceed to see, you know, some real selling here. You can hit one more short. If we're just holding below your level, perfectly fine being short here. I didn't. I like this candle for an entry to say like, nah, we are not breaking out. Look to short here, stops above that candle. Very simple. And then we sell down to the most in my opinion, this was the hands down most no-brainer long, quit shorten the dips that we have been handed in the market in a very long time. And why do I say that? Huge 550 level. You got to believe it's going to do something. We even have 550-30 as well. And then we have this trend. And what is this trend? We go to the daily. This is our trend. Third touch ever on this trend. And so you see that kind of confluence, you hammer along here, no questions asked, which I tried to allude to people to do that, but they were actively trying to short the bounce in voice chat when I was begging them not to. And then you take note of a trend. We had a trend here. 450. You hammer calls right here. No questions asked. Slightly wider stop than maybe you want, but you've got 40 cents of risk on the trade. You stop below 550. You break this trend. This is when I posted this in my tab, and we can look at my chart from the day just to really see what it was. This is where you hammer calls. No questions asked. I obviously don't have that lower trend, but I look at the daily. I knew it was there. So you hammer calls here. Here's the real trend. So this is what I posted in my tab. I said, we have now broken the trend and the very important zone, which we had discussed previously when we were up here. It was the target. Now we've broken back up through it. You buy calls right here. If you didn't buy them here, you buy them here looking for that scalp move to the upside, and you ultimately catch a nice big old breakout there. And so that's it. Ran a little long. I'm sure we're going to have some questions in here. So we'll go through those real quick. I've seen we had great turnout again. I think I saw like 60 of you, over 60 again, something. So great turnout again. If you got to leave, thank you for being here. You all are awesome. I know price action is super technical. Every day is different, but the best thing we can do is just stare at those charts and figure it out. Flacco, hourly 20, but it's shown that this one, oh, this one is hourly 20. These are trends. I don't know which one you were talking about. Oh, the custom script pinned in my tab, multi-time frame EMA. Could you use the EMA with the sentiment range? So I have to be honest, I'm not, I don't know. I've never loved the sentiment range, the moving average line myself. It's fine, but it's just not something that I love. Eagle, great question. The pivot point. So I hate it kind of because people say, oh, pivot point. But what they don't understand is that a pivot point actually is like a real thing in trading that involves math. Typically, when somebody says a pivot point, like this 552.36 is what people might call a pivot point because we've sold down to it. While we were selling down to it, all day, this is where we expected the bounce. Maybe 550 is what somebody would call a pivot point. That's not right, technically speaking, but if you do, there is a real pivot point that involves math, and it's based on statistics on the chart. Tim, I will never run a short time frame fib until the opening range is broken. So that was actually one that was one that I did today. I've obviously deleted it off my chart since. But so one of the things that I did for the opening range today was I wanted to know going from the high to low, what kind of bounce we could look for. And it ended up being that 50% fib. Then I also wanted to run an extension to say, where can I expect this? And so how I lined my extension up today was I lined up the 50% extension fib with the 50% or the 0% extension fib with the 50% retrace fib. And as you can see, it didn't quite get that bottom down there at that 161, but really nice way to do it. And I ran that off those highs and lows from the opening range. So I will always wait for that. So I just kind of showed again. I see I'm a little bit behind, but can I show to get the opening range? So all it is, super simple. You want to identify in the first hour and a half of the day, the highest high and the lowest low. Sometimes that lowest low or highest high will be early. That is what the opening range is telling us, is in the first 18 5-minute candles of the day, there's a 90% chance ish higher low of day has been set. So that's why when we're down here, we're in short bounce mode, we're breaking outside of the range. We now can say there is an extremely high probability this is high of day, and we want to continue to short these bounces. Yeah, Nash, I had to get out of VC2. That was like one of the worst. That was like an absolutely terrible, terrible feeling. Omar, thank you. Shanks, thank you. Johnny, Unique, Killer Skull. Man, we got all kinds of people in here. Thank you so much. You guys are all awesome. Nice, SK. I love that. I mean, mention this stuff to Tilio, mention this stuff to MMA. If you guys like this price action, if you like just kind of going through and analyzing the charts, I love it. If it's something, I don't know if we want to maybe, dedicate a shorter lecture or something, a couple of days a week or something to it, we can talk about it. But if you like this, we can do this. And, I do want to point out we're doing SPY. This works on everything. I don't care what chart I am looking at. I treat every single chart the same. You want to see candles that say, hey, a buyer's showing up. You want to see candles that say, nope, sellers are smoking you. You want to read these candles. You want to see these things that are working in your favor. It don't matter if it's, SPY, Tesla, AT&T, they all do the same thing. Yeah, Rhino, that's smart. Muting 99% of VC is absolutely genius. Yes, Dalai Lama, you can mute individuals in VC, and I cannot recommend it enough. And I'm just trying to get through a few of these questions. How would you put an hourly fib? You're going to have to ask that question a little bit better. Do I use level 2 at all? I do. But the issue with it is, if you don't know what you're looking at, it is 100% going to hurt your trading and not help your trading. So be very careful if you do choose to use it. I do like it, but it is important to note anything you see on level 2, you can also see in the volume. And so that's kind of what that's what I recommend. Learn volume, learn volume. Look at the people in OOT that do very well. They almost all use some form of volume. So learn volume. And because level 2, just real quick, these are orders that aren't filled yet. So you might see a big old number and it means nothing. I mean, like this guy, we got somebody on here right now. We got somebody bidding for, 10 lots of shares right here, and he's trying to get them $1 below where they are. That trade means nothing. So you'll see those kinds of things in your day and they can throw you off. So these orders haven't been filled. Time and sales, orders that have been filled. So if you see this order and you don't see it pop up on time and sales when it disappears, it didn't get filled and it tricked you. So be very, very careful. Right on, Rhino. Thank you. Yeah, Flocka just pinned in my tab. It's there. It's oh, there you go. Oh, so yeah, so you're getting an error. Do it manually. Top right corner, click setup, click open shared item, paste it in there, it'll work. Oh, and I don't think it'll work on the phone. Thanks, Noodle. I appreciate you. Yeah, thank you, everybody. Yeah, Rhino, I agree. I got a list of people I would block in voice chat. That place was the plague today. Right on, Nick. Thank you. Thank you. All kinds of hoopla, Flocka. You're right. Can I teach you about fair value gaps? Yeah, I can teach you about fair value gaps for sure. Do not use them. Yeah, Tim, and I know that some of the other guys, Toasty and stuff, they prepare awesome PowerPoints and things like that. Just for me, I'm visual. I want to look at a chart. Charts are what we're trading. So I know I don't get the fancy stuff and I just pull up my charts and we talk about my charts. And that's just how I like to teach. And so I know for some people it works really well. I understand for some people they want it a little more like bullet pointy, but that's just not the market, you know? You trade what's in front of you. You trade what's on the chart. And you have to be able to, admit you're wrong, try to be right as much as we can. But yeah, you're seeing I just like I teach the chart. We're here to read the charts. So get your feelings, get everything out of there. I'm happy you're enjoying it. That's what we want. We want people to like them. How do I put some fibs from a daily or weekly? Something that I might do, a big one that I would likely be looking at, from recent times is this was really our first pullback that we'd had in a while. And so I might be trying to look at some sort of retrace here, maybe something pulling down to, what they refer to that 50-68 range as the golden zone, sitting at a trend line, sitting at major support. Maybe that's where you want to buy calls. Maybe that's why Shark alerted calls. Who knows? But I'm always going to do a swing low to a swing high. You can even do, I think Tilio was doing, I believe he was running, and he likes to do the upside extensions as well on the fib retracement. But these are some, I think Tilio is running a fib somewhere around here that we ultimately hammered them all. From this low to this high, he was looking for the extension that way. But all I do on any daily fib is I look for a high and a low, and I just do my fibs between there. Can I pin my time frame again? It's not working. I don't know what that is. Nash, you only kind of need to learn time and sales. I don't know. One is equal to a lot, so it's actually 100. But then when you see it appear on time and sales, and it depends on your broker, it can mean a bunch of different things. It can straight up be like one share, Like if you look at this will be a time and sales that's likely moving right now. Let me move it. Like you can do time and sales here, and you can see, this is somebody buying 2 ES contracts, somebody buying 4 ES contracts. So these numbers are accurate. The level 2 times by 100. Think of it like a lot. Yeah, right on, everybody. Thank you so much. You all are just the best. You all are just the best. Oh yeah, and then on time and sales, change the number because like these twos and threes. Well, but since we're in the after hour, these are probably people. But like on SPY, who cares if somebody just bought 100 shares of SPY? When I trade SPY, if I'm watching it, I will always do greater than or equal to 5K. Like I don't care that somebody just spent $1,000 on SPY shares, but I do care if somebody buys $25,000 or $250,000 worth of SPY shares. That matters a whole lot more to me. So, and that's even like flow. People be like, oh, I just saw someone buy $10,000 worth of SPY calls, huge flow. And it's like, there was billions of dollars in SPY calls traded today. So like, I'm not too concerned with 10,000 bucks. Okay, well, that's going to do it. We ran a little long here. Oh, I see. Is our class on John Phipps? Yep. Toasty actually just did one. It's really good. It's real good. Yeah, the same Toasty. Let's look at this sick Toasty trade. We had a nice pop on the day. He said chase calls here. And then when we were down here, he told me chasing puts here. Love that guy. Okay, right on, everybody. Ran a little late. Thank you so much for being here and have a great rest of your night.